This could be the year you start building your wealth for real. Remember that idea of getting rich or even becoming a millionaire by investing smartly? It's much closer than you think, and real estate funds might be the first step to make it happen. And the best part, you don't need millions in your bank account to start. With a small amount of money, you can invest in large projects like shopping malls, commercial buildings, logistic warehouses, and even hospitals, and still receive a monthly income, just like rent. Want to know how? Today, I'll show you how real estate funds can be one of the best opportunities for those who want to start investing and make 2025 your financial turning point. If you've always dreamed of seeing your money work for you, stay with me until the end, because the tips I'm about to share might change your life. Let's talk about the real estate market and why it's so strategic for anyone aiming to build wealth. When you think of real estate, what comes to mind? Houses, apartments, maybe offices? The real estate market is much larger than that, and that's where the real opportunity lies for investors like you. In recent years, the Brazilian real estate market has experienced ups and downs. We've gone through economic crises, rising interest rates, and a pandemic that completely changed the way people consume, work, and live. It sounds complicated, doesn't it? But for those who know how to spot opportunities, these shifts create perfect windows for investing. For example, with the rise of e-commerce, the demand for logistics warehouses has exploded. And guess what? There are real estate funds that invest directly in these properties. Imagine earning a share of the profits from large companies using those spaces. Also, the corporate slab sector is transforming, with companies rethinking their workspaces and the most modern and well-located buildings gaining prominence. Another reason 2025 is special is the current economic scenario. With interest rates starting to drop, the real estate market is likely to heat up even more. And do you know what that means? Real estate funds could appreciate, and the monthly income, like the rent that shareholders receive, remains an excellent source of passive income. But hold on, it's not about investing in just any fund. The FII market is like a big party, and you need to choose carefully where to go. There are over 100 real estate funds listed on the Brazilian Stock Exchange, each with different characteristics. Some invest in shopping malls, others in hospitals, and there are even paper funds that buy real estate debt and turn it into income for you. And the best part, you don't need thousands of dollars to start. With less than $100, you can own a small part of a shopping mall or a commercial building. This makes real estate funds an accessible entry point for anyone wanting to start investing in the real estate market without dealing with the bureaucracy and hassle of buying physical properties. Now you know, 2025 isn't just the year to dream but to act. The real estate market is full of opportunities waiting for those who know how to see beyond the obvious. And real estate funds could be the key to building your wealth and taking your first steps toward financial freedom. Let's talk about the part no one likes to mention, but it's crucial for anyone who wants to make serious money in the market. Challenges. The truth is that investing in real estate funds and properties can be extremely profitable, but that doesn't mean it's always an easy path. Those who aren't prepared for these challenges might give up before they even start reaping the rewards. But here's the good news. Every difficulty brings an opportunity for learning and growth. If you know how to deal with obstacles, they can become shortcuts to success. And that's exactly what sets an amateur investor apart from a smart one. One of the biggest challenges, knowing how to react to market changes. Sometimes the news announces economic crises, rising interest rates, or falling property prices, and many investors panic. But those who truly know the game understand that these moments are hidden opportunities, especially for those investing in real estate funds. When the market is unstable, you can find real bargains, assets that can generate incredible passive income in the medium and long term. Another common challenge is the lack of initial knowledge. Many beginner investors make simple mistakes that could be avoided with a bit of guidance. For example, investing in a real estate fund just because it's trendy or because someone recommended it without really understanding what they're buying. That's like getting into a car without knowing how to drive. The risk of an accident is high. The solution: education and strategy. Even in challenging times, it's possible to achieve financial freedom and get rich on your salary. In my ebook, How to Get Rich. Even with a low salary, available in the pinned link in the comments, you'll learn practical strategies to save, invest, and increase your income. And I'm going to show you the way by giving you this gift. Units are limited, so get yours now before they're gone. Those who dedicate time to study the market, attend events like the Real Estate Guys Cruise, and follow key trends are several steps ahead. A well-thought-out strategy can help you protect yourself from risks and make the most of opportunities. For instance, instead of putting all your money in one fund, you can build a diversified portfolio with different types of funds: urban income, logistics, shopping malls, and paper funds. Another big obstacle is emotional control. The investment market can be a real roller coaster, and it's easy to get carried away by emotions, especially during downturns. Many investors sell at the wrong time, afraid of losing more, and end up missing a great recovery opportunity. That's why having a long-term vision is essential. Big investors don't worry about small market fluctuations. They focus on the bigger picture and the steady passive income real estate funds can provide over the years. When it comes to overcoming challenges, we can't forget the importance of having a support network and mentors. Joining investor communities, exchanging ideas with experienced people, and seeking professional help makes a big difference. Investing doesn't have to be a lonely journey, so if you think investing in real estate funds seems complicated, remember, challenges exist to be overcome, and those who persist end up achieving surprising results. The most important thing is to prepare yourself, stay updated, and never stop seeking knowledge. Did you know that reaching your first $100,000 is the most important step for building a prosperous financial life? This milestone is the turning point, the moment when your money truly starts working for you. And the best part, it's not an impossible mission. Anyone with strategy and discipline can get there. Today, I'll show you how to turn your investments into a financial growth machine and reach that goal faster than you think. It all starts with a clear mindset, seeing every dollar as a soldier working to build your financial army. The secret isn't saving every penny and cutting everything out of your life, but investing intelligently and consistently. One of the first things you need to understand is the power of compound interest. Imagine starting with a modest amount every month. At first, it seems like growth is slow, almost imperceptible. But over time, the magic of compound interest turns small gains into a financial avalanche. Every reinvested cent generates new gains, creating a powerful cumulative effect. To reach your first $100,000, you don't need to start with a fortune. The most important thing is consistency. Think of your investments as a tree you plant today and nurture daily. At first, it seems like nothing is happening, but suddenly it starts growing fast and bearing fruit. That's how investments work. And you know what can speed up this process even more? Diversification. This is where the role of real estate investment funds and other assets that generate passive income comes into play. These investments allow you to receive a monthly income while your capital keeps growing. Just imagine, you invest in a real estate fund, and every month a portion of the profit generated by that fund goes directly into your account. Now multiply that by several funds and other types of investments. In no time, you could be receiving a considerable income just by keeping your money well allocated. Another crucial point to reach your first $100,000 is to avoid common mistakes. Many beginners get carried away by market trends or promises of quick riches. The problem is that these opportunities usually come with high risks. The real winning strategy is to build a solid plan and stick to it, regardless of short-term market fluctuations. A great way to speed up the process is to reinvest all your earnings. If you earn dividends from a real estate fund or profits from a stock, don't spend that money on unnecessary expenses. Reinvest it. This simple habit might seem small, but it makes all the difference in the long run. Every dollar reinvested is another step toward your first $100,000. Also, don't underestimate the power of continuous learning. The financial market is always changing, and those who stay informed can take advantage of the best opportunities. Attend events, take courses, and seek mentors who have already traveled the path you want to follow. Learning from the experience of other investors can save you years of mistakes and accelerate your growth. Finally, remember that time is your greatest ally. There's no magic formula to get rich overnight, but with patience, discipline, and the right strategy, you can get there. Your first $100,000 is within reach. The first step is to start now, even if it's with a small amount. What matters is taking that first step and staying focused on your goal. To reach your first $100,000, it's essential to create a practical and detailed plan that serves as a roadmap for this journey. It's not about investing randomly, but about building a solid and consistent strategy. The first step of this plan is to define your goals. What do you want to achieve, and in how much time? Maybe you want to reach that $100,000 in 5 years, or perhaps in 3. The important thing is to be clear about where you are now and where you want to go. Once you've set your goal, it's time to analyze your current financial situation. How much can you invest every month without compromising your lifestyle? This is where a powerful concept called "pay yourself first" comes in. Before spending your paycheck on anything else, set aside a portion for your investments. Think of it as a debt you owe to your future self. For example, if you manage to invest $500 per month in assets that yield an average of 10% per year, in just over 10 years, you'll have your first $100,000. But if you can increase that monthly amount or reinvest all your profits, you can reach that goal much faster. The secret is to start as early as possible and remain consistent. Now, speaking of investment strategy, it's vital to diversify your portfolio. Real estate funds are an excellent option because they offer a mix of passive income and capital appreciation over time. Imagine investing in a fund that owns commercial properties in several cities. While these properties generate rent, you receive a portion of that income every month, as if you were an invisible owner of multiple buildings. But don't stop there. Combine this strategy with stocks from solid companies, index funds, and even fixed income for times when the market becomes more volatile. The key is to balance your portfolio to take advantage of growth without taking unnecessary risks. Another crucial part of the plan is to review your investments periodically. Market conditions change, new opportunities arise, and some investments that were promising may no longer make sense. Doing a quarterly or semi-annual review of your portfolio helps you keep your strategy aligned and seize the best opportunities. And we can't forget the impact of mindset on your plan. Many people give up halfway because they get anxious about market fluctuations or don't see immediate results. Here's an important truth. The biggest rewards come to those who can stay calm and focused in the long term. Think of your investments as a marathon, not a 100-meter sprint. You can also speed up your journey by finding ways to increase your main income. It could be a new project, a side job, or even turning a hobby into an additional income source. Every extra dollar you invest brings you one step closer to your $100,000 goal. Lastly, be patient and celebrate every milestone along the way. Reaching your first $100,000 is just the beginning. After that, you'll be ready for even bigger goals, like your first $500,000 or even $1 million. The most important thing is to take that first step today and stick to your plan. When you're on the journey to make your first $100,000, avoiding mistakes can be just as important as making the right decisions. Many investors waste time and money because they don't have a clear strategy, which can delay their goals by years. But don't worry. Knowing these mistakes in advance is the best way to protect yourself and accelerate your results. One of the most common mistakes is the lack of financial planning. Many start investing without organizing their personal finances first. It's like trying to build a house without a solid foundation. Before anything else, do a complete analysis of your income, expenses, and debts. If you don't have control over your finances, any profit from your investments can easily be consumed by unnecessary expenses. Another classic mistake is impulsive investing, following trends or recommendations without understanding what you're doing. You've probably heard of someone who put all their money into a stock or cryptocurrency because everyone was investing in it. The problem with these strategies is that most of the time, the result is a loss. The key is to do your own research and invest only in what you understand. And speaking of understanding, not seeking financial education is a major obstacle. The financial market might seem complicated at first, but the more you learn, the clearer everything becomes. Don't limit yourself to superficial tips. Study compound interest, asset analysis, diversification strategies, and everything that can help you make more informed decisions. Knowledge is the biggest differentiator between those who achieve their financial goals and those who fall short. Impatience is also one of the biggest villains for those aiming for their first $100,000. The truth is that the growth of your investments takes time, especially in the beginning. Many give up just before seeing real results. The difference between those who succeed and those who don't often lies in resisting the temptation to quit midway. Remember, the initial phase is the hardest, but also the most important. Another dangerous mistake is the lack of diversification. Putting all your money into a single investment may seem tempting when the promise of high returns is there, but the risk is huge. Diversifying your investments in real estate funds, stocks, fixed income, and other assets is the best way to protect your wealth and ensure more stable growth. Many also forget to reinvest their profits. When you start receiving dividends or monthly income, the temptation to use that money to increase your expenses is strong. But reinvesting those earnings could be what accelerates the growth of your wealth. Every dollar that goes back into your portfolio is one more step toward your $100,000 goal. Last but not least, ignoring market signals can be a fatal mistake. The economy is constantly changing, and those who don't follow these movements may fall behind. This doesn't mean you should react to every little piece of news, but it's essential to stay aware of economic trends, interest rate changes, and updates in the investment sector. Avoiding these mistakes will not only protect your money, but also give you an edge in the race to your first $100,000. If you remain disciplined, informed, and focused on the long term, your chances of reaching this goal are extremely high. Now that you know what to avoid, how about talking about specific strategies to double your earnings and accelerate this journey even further? If you want to speed up your path to your first $100,000, there are specific strategies that can double your earnings and boost your results. This isn't about luck or finding a magic investment, but rather using the power of strategy and focus to make your money work smarter and more efficiently. The first strategy is to increase your monthly contributions whenever possible. Imagine you're investing $500 a month, but decide to cut unnecessary expenses and start investing $700. This increase may seem small, but in the long run, it makes a huge difference, especially when the power of compound interest comes into play. Every extra dollar invested today can turn into hundreds in the future. Another powerful strategy is diversifying your income sources. Instead of relying solely on your salary, consider creating new ways to earn money. You can offer a service such as consulting, freelancing, or even turning a hobby into a profitable activity. The key is not to limit your possibilities. Every extra income can be redirected into your investments to accelerate the growth of your wealth. Additionally, it's important to consider investments with higher growth potential, but with responsibility. Some growth stocks or alternative investments may offer above-average returns, as long as you do a careful analysis and understand the risks involved. Combine these more aggressive investments with more conservative ones to balance your portfolio. Let's not forget the value of reinvesting your profits constantly. If you receive dividends or monthly returns, the best decision is to reinvest them. This creates a snowball effect, where your wealth grows exponentially. This is where the magic of compound interest truly happens. An interesting technique to further accelerate your results is using smart leverage. But beware, this strategy must be used with caution. Leverage means investing more money than you have available, usually by taking credit to invest. While it can amplify your profits, it also increases your risks. Only use this strategy if you are very confident about the investment and have a well-structured plan. Another key tip is to stay updated and look for opportunities in emerging markets. The investment world is constantly transforming, and new opportunities arise all the time. Examples include innovative sectors related to technology, renewable energy, or even the international real estate market. Studying and following these trends can open doors that more conservative investors may not see. It's also worth highlighting the importance of networking with other investors. Attending events, forums, and online communities can help you exchange ideas, learn from the experience of those who have already walked this path, and even discover opportunities you wouldn't find on your own. Remember, collective knowledge can be a great ally on your journey. Finally, stay disciplined. The journey to your first $100,000 requires patience, strategy, and consistency. But every effort will be worth it once you reach that goal and realize you're closer to financial freedom. From there, the sky's the limit. So, did you like the strategies to build your first $100,000 and accelerate your investments? Now it's your turn. If you're truly committed to transforming your financial life, write in the comments, "I am committed." I want to see who's ready to take the next step and make this commitment to their future. Oh, and don't forget to like this video to help more people access this content, and subscribe to the channel if you haven't done so yet. That way, you won't miss any upcoming videos packed with tips that can change your financial trajectory. See you next time. Let's move forward together toward success.